Let's go now to our friend Bimnet Abibi from Galaxy Trading. As always, Bimnet, welcome to Galaxy Brains.
Thanks for having me.
Man, it's been continues to be exciting. We said this. So we're recording on Wednesday, March 6th, but on Tuesday, March 5th, yesterday, Bitcoin made a new all-time high. I have to call it out because that's a rare occasion. So 69,338 is what I have, the new all-time high. That was Coinbase's price at a point on Tuesday morning, surpassing the previous all-time high, again, using Coinbase, of 69,000 flat. A lot of volatility, though, yesterday. A $10,000 move. We shortly thereafter traded as low as 59,200 before pairing losses and trading right back up to the 63K range. Now it's 67,000, basically. I don't know. What's your reaction?
I think this, what price action wasn't easy to call, but the writing was definitely on the wall or on the cards. Generally speaking, when you have a market, skyrocket just over a certain period, and when these types of assets hit resistance levels, especially ones as significant as a prior all-time high, like you rarely take those out on a first go.
Yeah.
It generally requires multiple tests. And so seeing a big sell-off into resistance after leverage got insanely overextended with funding rates and OI at super elevated levels, I think that was just, par for the course.
Mm-hmm.
And I think, in terms of what you saw with 60K essentially holding is characteristic of an asset that has been institutionalized. What do you typically get when you have an institutional asset class is you get a bunch of dip buyers, right? Institutions, aren't the types of folks trying to pay the highs.
Mm-hmm.
Like they buy dips, they wait for corrections. And so, I think seeing a healthy bounce off of 60K, seeing strong ETF inflow numbers.
Really strong.
Suggests that, there are dip buyers in the space.
Tuesday was the largest net inflows into the ETFs since day one.
Yep.
So day one was larger by like 10 million, again, on a net basis.
Yeah.
Huge volume, by far the biggest traded volume day in over $10 billion worth of volume traded on those ETFs on Tuesday. Truly wild.
I mean, it's insane. And again, another sign of institutionalized, right? The deeper the liquidity, the more liquid. Obviously liquidity, part of it is, how much price impact you have for something you trade. And so clearly we're having a lot of price impact. But the volumes are such that, it's acceptable for folks to traffic in decent size in it. And so that generally begets more institutions. And so everything you've seen so far is healthy. And I think that the macro landscape is certainly helping as well. Gold is at an all-time high now, right? Broke through 2,100.
Yeah.
And basically everybody is like, oh my God, do I need more gold in the portfolio? Do I buy gold calls? And I think the reason why gold's up there, it's not because U.S. rates are crazy bid or we've priced out, we started the year around 7 cuts priced in. You're at 3.5 now, or 3-ish. And, that would have generally been supportive of gold lower, but that's not what's happened.
Mm-hmm.
And so, what I think is happening is just the world coming to grips with the structural reality of the fiscal situation.
Yeah, Bitcoin and gold both all-time highs on Tuesday, March 5th. First time they've ever hit all-time highs together. Makes sense. Bitcoin
and S&P and NASDAQ are at all-time highs. So it's a risk asset and a debasement hedge.
So let's go to your point about what is you said the fiscal situations are becoming apparent globally. What else is out there that macro is concerned about?
I mean, the general supply of fixed income, right? I think I read some stat. There's 40% more treasuries that are going to have to be absorbed by the market than mature in this month of March alone. And that's not including corporate debt, right? And then the Fed on top of that is reducing its balance sheet. And then, you throw in what's happening with the regional banks and stuff, and they don't have strong appetite to buy paper, the BTFP, just went away. Dealers have strong appetite or not. But anyway, it's a lot of paper to absorb for any institution or any reserve level that the Fed can reasonably run
What's
at
the
the
stat
moment.
they're saying that now that every 100 days the U.S. is adding $1 trillion to its national debt at this point? That's the rate that
Yeah.
we're. I mean, that's shocking.
Shocking. And then you just keep running the math on that. The math gets worse by the day.
Right. It gets a shorter time period to add that trillion. I mean, we're
Yes, but it's also just like then it's your debt servicing. Like, and with the interest rates so high, right? As debt rolls off, right, that was lower yielding, the Fed has to issue all these bills and other treasuries that are far higher yielding than those that are maturing.
So this creates, though, a fear of what, if we play it all the way out, of parabolic debt can't be serviced. So then governments have to pay more to service it. So they have to cut back on other stuff. And that leads to recessions and turmoil or raises taxes.
And then also,
and eventually it leads to revolution, basically.
Potentially. But it's also in theory, what's your best way out of a lot of debt? And we've seen the story in EM. It's a lot of inflation.
Yeah.
And devalue your currency.
I see.
Right.
So then
and gold and hard assets should do well. And the argument for hard assets is it gets better every day.
Yeah.
And if Bitcoin's part of that hard asset narrative, that it's game over. Because I don't know about you, but I would put my life on savings on politicians continuing to want to spend.
Right.
Especially going into an election cycle.
Yeah.
And there's no in the political reality that we live in, there's no world where getting the fiscal situation right becomes a priority for both parties.
There's the one guy in that South American country, Argentina, Javier Milei.
Oh.
He's the only one I've ever seen dramatically win on effectively a massive austerity.
Yeah, but it's just
why? Because he's fun. He was also fun. He wasn't wow, the only way to do this.
I don't. You can't
He's out there with
compare
a chainsaw. No, you can't.
that to. No. But I tell you, if you go to Europe and you shill austerity,
no appetite.
That's just no, go away.
But here too. I mean,
but here's
totally
the thing, and the other problem though is just so structural, right? A congressman's got 2 years,
right?
Right. He's got to run for re-election every year.
There's an old thing, and I'm sure this has changed, but when I studied poli sci, this was 20 years ago at this point, but it was some stat that was an average congressperson when they get elected has to basically raise $6,500 a week in order to get reelected. And that actually forces a lot of them to not even be in Washington very often, spend most of their time back at home raising money.
Right. Yeah.
So you got two strategies. You raise a ton of money at home, or you basically make a name for yourself on television in Washington and raise national money that way.
Yeah.
Those are basically, and so they have to spend all of their time. By the time they get elected, they got to immediately get elected again. And that really makes it hard to do policy, and it makes it hard.
How are you going to solve one of the biggest policy challenges we're going to have over the next couple of decades?
Yeah.
And then it's also just as a function of who's getting elected, who's in power. It's people that have benefited from 30 years of insane fiscal spending and packages and low rates and low mortgage rates.
The average age of a member of Congress and the Senate is so high.
They're not thinking about the debt profile they're going to have when they're dead and what their kids are going to have, and at least. As well as somebody that was younger.
Well, and at least collectively as a branch of government, they're failing to act on this question.
Young people don't vote as much.
Well, right. No, I get it. The incentives are all misaligned to solve this problem.
It's crazy misalignment.
Oh, man.
And so, I'm going to stick with hard money. I'm going to stick to Bitcoin, gold, and other hard assets.
Right. I mean, cash-generating equities. People love equities for this. Equities are a good hedge.
They're fantastic fiat-based.
That's what Warren Buffett has always said.
Here's the thing. Bitcoin's just another version of a fiat hedge.
Right.
And some prefer it over, equities. And but the main point is I'd rather be in liquid fiat hedges that I can move around in good size and trade 24/7.
It's pretty nice. You can't
the right to privacy and
self-custody and if you actually needed to, let's say you needed to spend you can just send your Bitcoin. I can't pay someone an Apple stock if I have to.
No, you can't.
It's much more useful. Much more with gold, by the way.
Yeah,
I mean, I'm going to mail you a coin.
Yeah, it's the future, and people are seeing it. Yeah, and so that's kind of what's going on, macro-wise and
very
and whatnot. But it's so you never know when this fiscal stuff becomes the main focus of the market. And I think what you'll see happen when like the market really wakes up to this is a massive re-rating in U.S. interest rates and the curve, most importantly. I think if, as more people realize, the future of the U.S. is shakier, you should have a higher term premium, right? And so 30-year bonds, like, oh, wait, I'm getting paid, 4% and change for 30 years. Like, is that going to compensate me for the rate of inflation we're likely going to have?
It really need like 5, 6, 7% theoretically.
Yeah.
Yeah. Does that wreck mortgage rates also? Makes it harder for everyone to buy?
It should, yeah. Think about this. We have now, there are now economists calling for no rate cuts this year because the data is still super strong.
Yeah.
We haven't seen a collapse in housing, even though housing affordability has gone down a lot.
Right.
Because people still want homes like crazy.
Right.
And there's also just tons of wealth built up and liquidity built up and et cetera. And so those rates are going to, it's going to be an issue to bring them down because raising them hasn't really had that much of an impact. Right. But yeah, over the long run, I would expect rates to stay high and maybe even go higher. The question then, what you're really coming to is the Fed's inflation target of 2% even reasonable?
Right. And they get close to it in the end.
And right now, it's looking like you might get close to 2, but you're going to hover above 2.
Yeah.
And so, targeting 2, does it make sense? Or you're going to be more comfortable with 2.5, 3 in the world we live in, right? And that's kind of, what other folks are debating as well.
Bimnet Abibi from Galaxy Trading, my friend. Thank you for coming on Galaxy Brains.
Thank you for having me.